Hello, and welcome to PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachari, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation.
Hey Samir, welcome back
Hey,
to our
Sudhar.
next episode.
Yeah, welcome back. Episode 23 here.
Yeah, spring is behind us. Beautiful summer is in front of us, so I'm excited for our next episode here.
Yeah, absolutely. We're coming off of a slight detour into a very forward-looking kind of topic, quantum computing that we covered last time. And now we're at a news roundup looking at recent stories.
Yeah,
We got a nice mix here. I'm excited to do a review.
absolutely. I think all of these recent news items, like that's how we ended up on the quantum episode as well. I think I am finding that at least every month there is something that we feel like we can either add it to our news roundup or possibly do a deep dive. But that's great. I think all of these recent articles will be worth our audience time for us to point out to, and let's touch on as many of them as we can today in the time we have. I guess we'll start off with this, 100+ page report from Gallagher Re.
Yeah, that's right. So Gallagher Re, right? They've published an InsurTech report once a quarter. So for 2025, they're focusing on the role of AI. This report, right? They publish it once a quarter. Each quarter, they focus on a area of segment of insurance. So one was on auto and motor insurance. So that's what this one is. Subsequent quarters, they'll have reports on property, commercial, and life and health.
Yeah,
So
I'm super excited. I had a chance to dig in, and I think there's just a lot of good data. It's a ton of reports on, I guess, at the individual InsurTech level towards the end of it. But we thought we could highlight 3 or 4 major takeaway points here on this slide, and then lead with another chart that gives you a historic perspective.
yeah. So few 5 or 6 maybe just big picture takeaways that they found, right? So one is that the funding in Q1 of this year, it surged 90% quarter over quarter compared to previous quarter. And when they look at it historically, it's the highest level going all the way back to Q3 2022. And not surprisingly, right, this is based on dollar amounts, right? So the deal count as well is in line with that. So 24% rise in number of deals.
Although I have to assume, people are probably getting bigger and bigger, investment checks. I have to assume 90% quarter over quarter, right? So deal volume is not as much as 90%. So some of these deals are probably getting a bigger check.
Yeah, and we'll come to that maybe a little bit later. That sometimes even just one big one can skew
That's
the
right.
averages. So, anyways, right, the next piece here, right, that the focus on early stage has slowed down. So it's a near 5-year low, which is also not surprising. As we look at the chart, it will become plenty evident.
Here comes the AI.
61+% went to AI-centered companies. Yeah, so no surprise there. And 5 reinsurers made tech investments. So we don't always think about reinsurers. We're usually looking at primary writers, but here we are. And then since this is an auto-focused report, right, they pulled out that, nearly 430 million of funding to InsurTechs focused in auto.
So that's a pretty decent, more than a quarter percentage of the deals volume at least is on the auto side. Again, not surprising. I have to assume like that's where one, the big money is, and two, perhaps more opportunities to leverage tech.
Yeah, certainly.
So this is the most interesting chart. I guess a picture tells a story, right? Worth 1,000 words.
Yeah. So this chart, just so everybody's oriented, right? We're looking at a combination. The bar charts are funding volume in millions of dollars, and the line chart is an overlay of the deal count. And to the earlier comment, right? So funding peaked for InsurTech in 2021. And then with the downturn in 2022, the funding has gradually dropped. You can see the deal count has slowed down as well. And so in 2025 so far, it's been pretty low. Early stage companies, they called out, is at a 5-year low. So pretty much in line with the trend. But the fact that the dollar amount in Q1 has increased maybe is an indicator, leading indicator that we've turned the corner and we can expect an increase. Although we had significant headwinds in Q2, right, with all of the trade deal and tariff kind of conversation in the macroeconomic climate. So
But
I'm
then I
not so
think there's
sure
a
that we're going to see a
tailwind.
turnaround.
The tailwind is, I think we'll touch on that, is I think there's at least a couple of notable big ticket exits that could be a motivation for these guys to continue down this path to create value, right?
Yeah. Fair
So
enough.
yeah. And I think we were going to jump into the page 12. Yeah. So I think figure 2 on page 12, and then maybe a piggyback into looking forward to the page 21 chart.
Yeah, so here what they are basically highlighting is that if you look backwards into recent InsurTech activity in AI, since it's an AI themed year, the 5 techniques for AI that they've seen being used and what the impact and ROI, impact is. So not really surprising, machine learning fares front and center, but then classification and predictive analytics, LLMs and automation as well. This is more, backwards looking. They also did a survey of AI experts.
On page 21. Yep, there you go.
And on page 21, they show that this group of experts that they polled, they anticipate the use of AI to be most impactful through techniques like automation and chatbot, image recognition.
If you zoom in a little bit, we can read through the labels. Yep, there you go. Perfect.
Yeah. So the interesting thing for me, right, is that on a relative basis, these may make sense and might be intuitive, but I found it a bit lacking. The report, it didn't include, who are these experts that they surveyed? How many did they talk to? What is their connection with insurance? Are they AI experts or insurance experts or both? And then how did they score? That's also not clear. They've assigned a score of 0 to 100, but on what basis? So somewhat,
Yeah.
I'm being nitpicky, but it would have
No,
improved
I
the
would
relevance
add
of
to that
this.
critique sentiment also to I don't know, as a consumer of this chart and insight, I don't know if I benefit much from the categorization of these techniques versus the actual, either a use case or a capability domain area or subdomain area into, say, subrogation or, fraud identification or, whatnot, right? It seems like a hodgepodge of techniques here, and it's good to know, I would say. Although categories like automation, like, I'm scratching my head and say, like, how do I, think about automation? Like, right?
Yeah, yeah. Yeah, fair point. And I guess I would infer from this focus on AI technique that these are AI experts, not so well versed in insurance. Otherwise, you may have seen, the most impact is going to be in customer service or in auto physical damage assessment or whatever, right? You identified a few areas as well.
That's right.
So,
No, I think that's great. I think it's still a very well done report. There's a ton of information, so we'll share the link to the article and the report, and we'll look forward to hearing from our audience if there's anything that piqued their interest that we didn't touch on.
yeah,
Um,
absolutely. And just one more quick point. This is a long-standing study, right? Probably going on 10 years that AJ Gallagher has been putting this out. So it's worth putting on your radar and just following it every quarter.
absolutely.
They have a focused update. And the deal information, they actually provide all that data in the end of the report, actually a good probably 30, 40 pages of this document are just listing out all the different deals that they have covered in this report.
Yeah. Which I guess leads us nicely into the next article, not necessarily directly tied to InsurTech such, but certainly around a partnership around technology, and the one around MIT being in the partnership with Generali caught my interest. But I thought right in the middle, there's a reference data point that's being shared here that could be of value to our audience on, at least how Generali is planning over the next 3-year period, their overall spend, and then what portion of that spend is in digital and technology. I mean, that's 1.1 billion, $1.5 billion over a next 3-year period on digital and tech advancements. And I would say 443 million on specifically on the, I guess, a digital subdomain area. So that interesting data point. I think this is obviously a very big global insurer. So these dollars are fairly big numbers over a 3-year period, but still worth, benchmarking yourself.
Yeah, and just kind of poking a bit of fun at this. The dollar's recently weakened, so these euro investments are probably even
Getting
bigger in
closer, right?
dollar terms now.
Right. Although the third one that you haven't highlighted is probably tied to the previous one is, they've also earmarked 250 for ventures to investing in insurtechs and fintech. So there you go, right?
Yeah.
Interesting article in that sense. So we'll share this one as well. So I guess
Yeah.
then from moving from here to an interesting article from LexisNexis. I think we have touched on LexisNexis several times on our podcast, right? In multiple contexts.
Yeah. This one caught our attention because one, news from LexisNexis about a new product. Secondly, we've touched on use of electronic health records in life insurance underwriting or in care management for work comp claims, things like that. So the maybe noteworthy piece out of this is that LexisNexis had at some point acquired this company, Human API. They had been around for a bit, innovating in this space, trying to connect collect data from disparate electronic health record systems and make them available to life insurers. So when somebody applies for life insurance, instead of ordering a attending physician statement, the life insurer could, through Human API, request a health record. The
Yeah.
challenge that Human API faced was that their hit rate of finding a health record for any given applicant was fairly low. I don't know the exact number, but some places I heard as low as 20%, other places I heard as high as 50%, meaning that, 2 out of every 10 applicants, they would find a record. 5 out of 10 applicants, they would find a record. But if you follow this link here, right, which is an article or a set of white papers and materials from LexisNexis directly, they quote that the tipping point for this technology to be useful is if you have a hit rate of at least 80%.
That's right.
And so evidently by incorporating this type of consumer mediated electronic health record lookup with LexisNexis data repositories and LexID and things like this, they're presumably able to get higher than that number. So it's probably worth looking into.
It's great, right? I mean, even if you average out the numbers you quoted, right, somewhere between 30% and then moving up to 80%, I think they're probably going after that holy grail, right?
Yeah. So I don't know who's using them. If any of you listening in have looked into this health intelligence product, I'd love to talk more. And if you haven't, if you're in this space, it's something to explore and keep an eye out.
Yep. That's great. I always admire the ventures into the data side of things. I think it's and then EHR data is, I think, a hair splitting exercise at least in the US. And so if they're quoting 80%, I have to assume they're investing a ton of money in going after multiple data sources and cleaning data and synthesizing and all that stuff.
Yeah. And I've spent a decent amount of time in this space, implementing direct-to-consumer life insurance, instant decision underwriting, so on. So I can geek out on this quite a bit. I'll spare
We'll save that for
folks
another
all
day.
this.
But I think
Maybe
to
a
Roundup
different day.
or InsurTech, I think we have another interesting news item that speaks to the excitement around the InsurTech with Munich Re's acquisition of Ergo for a whopping $2.6 billion. I'm sorry, Munich Re's Ergo acquiring Next Insurance for a whopping 2.6. I misspoke, but more important is the Next Insurance because I think they have been around since 2016, if I remember.
Yeah, that's right.
And we've known them. We may have touched on them as an InsurTech carrier in the past. I've seen them in ITC summits and things of that nature. I think over the years they've built a 600,000 customer book of business and $548 million of top line. I think that's a pretty good exit for them with those numbers, from 548 top line to a 2.6 acquisition. So decent five times multiple off of the top line. I think this is probably one of the best that I've seen in the recent times on InsurTech.
Yeah, that's right. So, the dream lives on. Big exits are still possible, provided that you have strong fundamentals in your business. And it's not just primary writers that are looking at this stuff. Reinsurers are as well. And that's a tie back to the AJ Gallagher report, right? They commented about reinsurers have had activity in this space. And to your point that 90% growth in dollar amount, but only 24% in deal volume. So there you go, right? When one of them is 2.6 billion, the average goes up quite a bit.
Yeah. No,
So
that's a good. I hope people are getting excited about this, and hopefully many of these will come along the way in the next year or two.
yeah, that's right.
So that rounds up our first suite of news items on the InsurTech, and I guess we are pivoting to the next series around innovation. And as always, AM Best is featured in most of our news roundups. But so here's one on innovation and innovation culture, and I think we have a couple of quotes from these articles that is worth highlighting.
Yeah, that's right. So this is a Feb edition of Best Review, right? I think this is maybe even the cover story that there's significant value in innovation culture. So it was interesting, right? They've quoted a number of industry leaders here. So I thought this was worth kind of paying attention to, right? That customers buy from innovative companies, employees want to work for them, agents like selling their products, shareholders want to own their stock, and leaders who innovate get promoted, and their companies thrive in the marketplace. So this has been
Nice
true
to
for a
read it, but
while.
I wonder
Sorry?
which company. I'm saying nice to read that phrase. I wonder which company in our audience mind pops up when they read about that as an insurance company, right?
Yeah, yeah.
Non-insurance consumer brands certainly pop up, but I think there's probably a few in the insurance world that at least qualify for some of those items, if not all of them.
Yeah, yeah. But the next part is equally interesting, right? That these companies that were innovative, their market share has amplified because it was a better model. But in recent times, what's changed is that their capacity to change has increased significantly. So, meaning that innovation, right, becomes kind of routine
More,
and just a
more,
part
more.
of your
Yeah,
uh, culture to speak, so to speak.
yeah. I know you also had another piece of, I guess in personal lines at least, this has become a stable stake.
Yeah, yeah. So, in the past, it was source of competitive advantage. Now it's a baseline capability. Speaking of innovation, and nowhere is this clearer than in personal auto. And the examples of this, right, obviously are use of telematics and use of automated claims adjudication and underwriting automation. So these used to be uh, advantages, but now if you're not doing it, you're not going to stay around for very long.
That's right. Yeah. This is one of those things where I guess, we don't want to wish on anyone, but, if you inadvertently get on an auto claim, you'll probably see some innovation at work.
Yeah, yeah, that's right. Uploading pictures, you get automated or near real-time adjudication, and so
That's
on.
right. That's right.
So,
Yeah.
speaking of culture, though, right? So, towards the end of the article, right, there's a few quotes that are noteworthy, right? So, here's a part, right? Companies' culture is the hardest thing to change. Question is, do you develop a strategy that's aligned with your culture, or do you develop a winning strategy and then change your culture to align with that strategy, right? So I don't know the answer, but my hypothesis says you better look at the culture you've got and you better figure out what type of strategy the culture is going to be able to execute.
That's
Um,
right. That's right. I think that leads nicely into another article that referenced the same point. It's by a practicing CEO of an insurance carrier. I forget the name of the lady here referenced, but she's the CEO, and And I guess, she's calling out innovation, depends on a lot more on the culture and mindset and emotional intelligence, and probably less on the actual technology itself. And again, it just echoes a little bit of what you shared about what was shared on the AM Best article.
Yeah, that's right. And it's a good read, and also just as a side note, it comes from a presentation at the Women in Insurance Summit in Canada. So that's probably how it uh, bumped up in our reading, but
Yeah.
worth
And I
looking
think
at.
this one is particularly interesting, and you and I have touched on it in our podcast, is that, as the CEOs are championing technology, innovation, and transformation, I guess they are expected to represent it at the board level. And I think, this article references at the board level, it'll probably be less about technology and more about, how can you bring them on board with with the vision and the transformation and all that soft skill stuff, right?
Yeah,
So
makes sense.
that's great. All right, and I think we are now pivoting from here to a slightly interesting but age-old topic and a question that has always existed in IT in general, but more so in insurance, right?
Yeah, that's right. So this also is from Feb edition of Best Review, Build versus Buy in the Digital Age. And of course, it starts out with sort of some commentary on why companies build and why companies would buy, and mentioning the profile of ownership and the cost, and how building is heavy up front, but in the long term ends up being less expensive potentially if it's done well, and maintenance isn't a headache. When you buy, you spend less upfront, but in the long term, you're continue to, pay somebody else over time, so it ends up being more costly sometimes. So
Yeah,
that's nothing new or even nothing interesting. I would say, why even bring this article in? So the reason for bringing the article in is right that there's some interesting data point here. So in 2000, the global spend mix for insurers was 90% internal versus 10% third party. Now, in Feb 2025, when this report was published, it's 55% internal versus 45% external. So very much so, right? The rise of SaaS software, you can see it here. Probably not shocking, but the data is now there. And as an insurer, as a CIO, CTO, looking at your own organization, maybe you have numbers to benchmark against. If you don't, here's something that you could use.
yeah, I mean, over a 25-year period, I think that's a pretty significant shift. Nearly 50-50 in-house versus outsourced or third party. I can only imagine with more and more agentic AI becoming the norm, automation and third-party sources automating as an outsourcer. Uh, I can only imagine this might end up shifting out the other way, maybe in the next few years.
Yeah, that's right. And actually, if you read the rest of the article, it's a short one here. They actually point out. So this data that is being quoted is from an Accord study on digital maturity, and they do point out that while the 55-45 split is an overall average, you will find categories of companies that are digitally very mature. Their profile is more like 30% internal, 70% external. You have middle of the pack, which are more 50-50. And then you've got the digital laggards, which are back at 20 internal, 80% external, uh, but for very different reasons than the digital mature companies.
That's right. I guess with that, I think we had one last article that just points out to And a known fact, perhaps, but maybe reassuring fact about this article's title was not as much intriguing. So, but at least digging in, it quotes a report and a data source from a company called Ernix and their trends report. But what's interesting was 49% of the 431 global insurance executives acknowledge that they're behind schedule with respect to their digital transformation journey, particularly to update their legacy software system. So I guess if we categorize legacy mod as one of the big ticket items that we on and off cover on this podcast, I say this is just another data point for us to keep in the back pocket.
Yeah. I mean, I don't know. It's pretty depressing if you ask me, right? State of affairs here that you start a project, coin toss whether it's going to be on time or not. And by the way, they don't comment on actually how many actually even complete versus get abandoned.
Yeah, I
So
guess that's a good point. I mean, but maybe on a positive note to wrap this up is, 51% are either on schedule or ahead of schedule, right? So
yeah,
let's hope that many of our audiences are in that bucket.
that's right. Yeah.
Yeah. So with that, I guess we will wrap. As always, Samir and I spend quite a bit of time trying to cull through the articles and news and sources to find items that is worthy of your attention, and to the extent that we can pull out the nuggets and insights that's worth you to look at. I think that's what we're doing. Especially in insurance and technology, it's not easy to find these, so we're always being very judicious and thoughtful. So if any of you have any suggestions on what other sources we could look at, what other articles or what other things that we could be talking about in the next quarterly, we would appreciate you guys pinging us online or in LinkedIn or in YouTube comments. But as always, please share, comment, and help us spread the word.
And that's a wrap for today's conversation on PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.